About even on the markets. We started 3-2 declining to advancing stocks. We're now about even, sitting at the highs for the day. What I think is important is it's good on tech today, but broader than that. And that happened yesterday, and that's a very good sign for the market. Look at the sectors today. So, yes, tech is doing well, but we also have industrials, we have materials, and we have energy stocks as leadership groups. This happened yesterday. As tech was on the weak side, those sectors saw a notable buying, also saw notable buying in healthcare as well yesterday. Consumer staples, interestingly, lagging today. FANG stocks doing better today, but remember something. It's been a tough couple days for Apple. Apple was 220 on Thursday. It dropped to 200. We lost 10% in 2 days on Apple. That was a big move on Friday and Monday. Facebook a little bit better. Amazon, Netflix, Alphabet, all a little bit better here. In fact, they've been better as we've been going on the last 15 minutes. But in general, we have been seeing a rotation since last week. The market bottom, what was it, Monday, the 29th, I believe, of October. And since then, the S&P is up about 3%. But the FANG names generally are underperforming. Apple and Alphabet, Amazon are all down. Remember, the S&P has been up 3% since then. Facebook's still underperforming. Only Netflix has been outperforming the overall market, up about 5%. Major sectors, again, some rotation. I really love it when I see this. We're not seeing as much going into tech. They're only up fractionally, but materials and financials have done better. Consumer staples have outperformed. Industrials are performing with the market. Remember, the S&P up 3% since October 29th. And we saw this notably yesterday with this rotation. They didn't take money out of tech and then just put it in a closet. They put it into other areas of the market, a good sign. Finally, am I the only one that has a problem with the consensus in the stock market? The consensus being the Democrats will take the House, the Republicans will maintain control of the Senate, and the market will go up because the market likes gridlock. I have a problem with this scenario. Remember, the market has gone up in the last 2 years, partly on the idea that there has been no gridlock. That's why we got the tax cuts through. As a result of that, market has risen on lack of gridlock. Now everybody says, oh, we're going to get gridlock, therefore the market goes up. I find this a little bit hard to swallow. I think this might be a little rockier ride than people believe. I think we're going to have problems with the deficits. I think a lot of Republicans are going to be very concerned about that once again, as they should be. I think stimulus spending is going to be a tough call. I know everybody wants an infrastructure bill, and I don't know how anybody's going to figure out how to pay for that. You're going to have the president blaming the Fed for any slowdown. That's going to create a political imbroglio with the Federal Reserve. And then you've got the trade tensions that are likely going to continue. You have rates likely rising. My point here is that I agree historically the fourth quarter is a good quarter after the midterm elections. Everyone knows that. But we have a very unusual scenario here with the Fed, with trade tensions, and with all sorts of things we don't normally have to deal with. I would be a little careful with just going along with the consensus that somehow gridlock is always good for the market. Sometimes it may not be. Let's keep an eye on that. We're at the highs for the day, Carl. Back to you.